Hi, today topic is Indian taxation. And with above, you will get an answer for how to configure withholding tax in country version India in the SAP system. So going further, first of all, you have to know about what are the taxes, what are the tax types in India, and what are the taxes in India. Generally, generally in India, taxes are broadly classified into direct tax and indirect tax. Indirect tax. So coming to the direct tax. Under direct taxes, we have five taxes. First one, income tax. Second one, capital gain tax. Third one, corporate tax, and etc. Income tax means every individual whose totally income exceeds the taxable limit has to pay income tax based on prevailing rates applicable to time to time. Income tax means every individual whose totally income exceeds the taxable limit has to pay income tax based on prevailing rates applicable time to time. Capital tax, capital gain tax. Capital gain tax type is for example, if you are sell a property or shares or bonds or any material and earn profit on it within predefined time frame, you are supposed to pay capital gain tax to the central government. Corporate tax. Corporate taxes are annually taxes payable on the income of corporate operating in India. Corporate taxes are broadly classified into domestic companies and foreign companies. Like the way indirect tax. Indirect tax type. Indirect tax broadly classified into 20 different types of taxes. First one, CIN WHT. CIN WHT is nothing but your excess duty. Second one, sales tax. Third one, service tax. Fourth one, freight duty. Fifth one, value added tax. Sixth one, central sales tax. Seventh one, education cess. Eighth one, higher education cess. With above, recently government is newly introduced three different types of cess, like infra, infrastructure, infrastructure, infrastructure cess. And tenth one, Swachh Bharat cess. And 11th one, Krishi Kalyan cess. Here we go. For direct tax type, we do withholding tax configuration in SAP system. And like the way for indirect tax type, for indirect tax type, we do SIN configuration in SAP system. So coming to the indirect tax type, sales tax. Sales tax are broadly categorized into three categories. First one, CST. Second one, VST. And third one, sales during exports and imports. These are the categories under sales tax. VST. Value added tax. Value added tax is type of tax which is levied on goods and sales by the state government. It is most important revenue for the state government. Levied on sales of goods. Within state. Like the way CST. CST. Central Sales Tax. Central sales tax levied on sales of goods by the central government. But the revenue goes to the state government. And also, CST Act is administered by the state government only. Levied on sales of goods by the central government body. Which is central sales tax is interstate sales. Inter sorry enter sales tax. For example, a product manufactured in Chennai and customer purchased in Mumbai. So you need to send a product from Chennai to Mumbai. So here the CST is coming to the picture. So when your sales is happening in between two different states, you have to pay the sales tax to the central government. So next one, service tax. Service tax levied on service by the government body. If you are for example, if you are getting paid service tax, if you are getting paid service, so then you need to pay the service tax for that service. Levied on service by the state government. Sorry, service tax is levied by central government. And next, CIN WHT. CIN WHT is nothing but your excise duty. Excise duty. So excise duty is a type of tax charged on produced goods within the country. For example, if you are producer of goods or if you are manufacturer of goods or you hire the labor to manufacture a good, so then you need to use so then you liable to pay the CIN WHT tax to the central government. Excise duty. Excise duty levied on PRO producer goods by the central government. So Under excise duty, we have BED, means basic excise duty, and AED, additional excise duty, and SED, special excise duty. So next tax is custom duty. Custom duty is nothing but freight duty. Custom duty levied on import goods by the central government. Generally, the duty is payable at the point of entry, like airport, shipyards, and border checkpost. Levied on import goods by the central government body. So like that, now we have completed CIN WHT, sales tax, service tax, and freight. And also, of course, VAT, CST is also we completed. Sales tax, service tax, CIN WHT, and custom duty. So coming to the education cess, higher education cess, and new introduced cess like infrastructure cess, Swachh Bharat cess, Krishi Kalyan cess. Education cess and higher education cess. Education cess and higher education cess is deducted at and used for education of poor people in India. All taxes in India are subject to an education cess, which is 3% of the total tax payable. And education cess is mainly applicable on income tax and excise duty and service tax. For example, if you are going to pay income tax, if you are going to pay income tax definitely consists education cess, including in education cess and higher education cess. Like the way if you are paying excise duty definitely include the education cess and higher education cess. Like the way service tax. Education cess used for education of poor people in India. Either goods import or exports. Definitely, manufacturers needs to pay the education cess and higher education cess. Like the way recently government introduced Swachh Bharat cess, Swachh Bharat cess is recently being imposed by the government of India, and the tax and the Swachh Bharat cess service started from 15th November 2015, which is recently being imposed by the government of India under Clean India process, which is, I believe, government is collecting 0.5% under Swachh Bharat cess. So like the way Krishi Kalyan says, the Krishi Kalyan says is introduced in budget 2016 finance by the finance minister. The Krishi Kalyan says is introduced in order to extend welfare to the farmers. The effective rate of Krishi Kalyan says is I think 0.5%. The tax is introduced in Jan 1st 2016. Krishi Kalyan says introduced introduced in order to extend welfare of welfare to the farmers, which is I believe 0.5%. Like the way infrastructure says, which is recently introduced in budget 2016, which is broadly categorized into three slabs. So the first slab 1%. Second slab 2%. And third slab 4%. So the first slab 1%. First 1% infrastructure cess is applicable on petrol or LPG or CNG. I mean, if you are going to manufacture any petrol, LPG, CNG related vehicles, so then you need to pay the 1% tax to the central government, and the vehicle should be not exceed 4 meters, and the engine capacity not exceeding 1200 cc. Like the way, like the way, second slab 2.5%. If you are manufacturing any diesel vehicle and which is not exceed 4 meters and engine capacity not exceeding 1200 cc, so then you need to pay the 2.5% of cess into the into the government, central government. And like the way, 4%. If you are manufacturing any vehicle like SUVs or so when you are manufacturing SUVs, you liable to pay the 4% tax, 4% cess to the central government, which is recently introduced in budget. I think it is 2016. So, like the way, we have other taxes like professional tax, municipal tax, entertainment tax, stamp duty, registration fees, gift tax, toll tax, and I think dividend tax. Recently, dividend tax is introduced in 2016 budget, and which is levied on your dividend income, and the value is 10%, 10% of your income. And dividend tax is started 1st April 2016 onwards, I believe. And like the way, we have entry tax also. Generally, the entry tax is imposed by Gujarat, Madhya Pradesh, and Uttarakhand, like Assam, Delhi, and I think Haryana. These Haryana state. These are government recently introduced, and the entry tax main purpose is to encourage the local made goods, and the tax rate is variable 5 to 10% depending upon the state. Some states are collecting 5% of entry tax, and some are collecting 7 to 8%, and some are the 10% like that. Well, so finally, you are paying 25 different taxes to the central government and state government.